Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Thursday. What's up, everybody? It's Thursday. It's the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an amazing trading day yesterday. For those of you new to the channel, do me a favor, click that subscribe button down below so you get the updates as they become available. For those of you that have been here before, do me a favor, leave a comment, leave a like, leave something so that we know that you're there, you're watching, you're listening, and you're having a good time. All right, so let's go ahead and dive right in. We're going to be a little bit abbreviated today, run a little bit short on time. My typical co-host, Charlie, for those of you that know, he fell and broke his arm recently, so he's going in to have his pins removed, so I'm going to be pretty quick, pretty abbreviated today, so I'm going to get to the point, and I'll probably just cover the four major markets pretty quickly. So yesterday on the S&P, we had a live trading room at Traders Army, and I will tell you, I anticipated, we had a nice little short off of this supply level, and I kind of had anticipated yesterday that we would get another opportunity for a short off the 60-minute chart, and our 60-minute short, unfortunately, did not come to fruition. We came into the level and then just popped through it right away. So really, there was nothing there on the 60-minute level. And now we've started our move kind of back up. Now we still technically we put in a higher swing a higher swing low and a higher swing high on the 4-hour chart. And so we have not quite yet cleared the last hurdle, which is this gap that we had the gap down on Sunday. But prices are indeed continuing to rise. So our next supply level is the gap area. When I look at the demand, coming into the demand areas, I really like this little 15-minute demand, but the time of day is actually better way down here. So I'm going to put this 15-minute demand in here as a level, only because the form is good, the structure is good, everything is pretty about it. But you may want to go all the way down to the pivot. The pivot might give you based on your risk tolerances a better entry. Now in the Nasdaq, we didn't feel quite as strongly about that reversal level, so we actually made it a confirmation short. And on the confirmation, price went right through without really hitting anything. We were looking at a little 15-minute level in there, but nothing really occurred. And so oftentimes when you're trying to trade with the trend direction, you're gonna get these little tiny stop outs when the trend direction reverses. There's a lot of people that'll go on Twitter or whatever and say, hey, don't take those 15 and 60-minute levels. Stay with the big picture trend. Well, the problem was yesterday the big picture trend was still down. So it's really easy after the fact to say, hey, we had a great big bullish day, when in reality you're following the trend. You're going to take losses on days like today. I really, that's important for me, is to remain transparent. And when the market reverses trend directions, if you're following the big picture 4-hour trend, you're going to get stopped out on those small time frame trades, and I'm totally okay with that. Or you won't have entry, which is what we had here in crude, right? So now in crude, we had the entry. We had a 60-minute entry because this was a confirmation short. So price came into the level without breaking it and then broke down through it. But this is where the 6-candle rule comes into play. 1, 2, 3, 4, 5, 6. So after 6 candles, the trade was still at break even. Time to close it out and walk away. And that's really the purpose behind that 6-candle rule. And then we got a little bit of a breakout move. So our next level doesn't come into play until way up here, which is our confirmation short. Now I'm going to add a level down in here, this little wick over wick area on the 1-hour chart. I'm going to put up there as a potential for today. I think that this level down here could hold if we get a little bit of a pullback. And then gold, we didn't come quite to our little demand level. We've got a tiny little demand level here, although I will tell you I'm not a big fan of the fact that we're basing in front of it. So for me, this little demand level, if we base a little bit more in front of it, could become more of a breakout that we could blow right through. These are speed candles, and speed candles do tend to get retraced over time. And so I'd actually be okay if you ignore this demand and then just take a short straight down through it if we base in front of it. The key is do we base in front of it, right? If we do come straight down into it, you may get a little 2-to-1 move, and then you set yourself up for the potential short from that point. Now, as far as our bonds and currency markets go, just taking a quick glance at them, because like I said, I want to be a bit abbreviated today on the video. Just taking a quick glance at those bonds and currency markets. The 10-year note, we got a nice little pullback in here. This is coming close to a decent area of demand. Now, we would anticipate a little pullback if we continue to see bullish market movement. So let's see what that kind of turns into. Looking at the Aussie, we did not make it into our supply level yet, which we identified earlier. So prices are still a potential for this supply, not quite there yet. The euro, we've got a little 15-minute supply level up above us in here. And then the Canadian dollar, we're between some areas in there. Really, when I look at the currency markets, there's not a tremendous amount. I do like the setup that we're getting in the Japanese yen. I think that the Japanese yen, we could be looking at a breakdown below this region. This is setting up for a really nice breakdown, potentially, below here. We want to see a little bit of basing before the level. As it stands now, your stop would go above this pivot up here. And then the Great British Pound, we actually did just recently get a nice little breakdown. So you could follow that breakdown and continue to trade this thing on a candle-to-candle way if you want to. Certainly don't want to chase a trade, but you could trade this on the breakdown level here. So overall, I think that you've got a couple of nice... Oh, there's our nat gas. We talked about this on a breakdown the other night, and we got a really nice move down from that area. We had a rally up out of it and a nice breakdown from there on nat gas. And then copper, we're still sitting above a potential breakdown in that one. All in all, some fairly bullish movement yesterday and in the overnight sessions tonight. We still have to fill this gap from Sunday, but I think that there's a chance we'll just kind of continue to run up. And so take a look at your bullish equity positions. See what your bullish equity positions have done, because your bullish equity positions, we had talked about the fact that if the market pulled back, it was really just a good opportunity to get in on some bullish equity positions. So take a look, see what they're doing for you as far as quality opportunities. But that's all I have for today. I will be back tomorrow with a daily market commentary. If you have any questions, send us an email, support@tradersarmy.com.